And we're going to kick off with Will Harborne from Ethfinex, project lead of Ethfinex, who's going to tell us more about that. Thank you very much. Let's welcome him on stage.
Thank you very much, Mona. Hi, I'm Will, so I'm the project lead for Ethfinex, and essentially what I want to try and do today is give a bit of context around Decentralized Exchange, which we're going to hear a lot more about over the next few hours. So Ethfinex is a new exchange, particularly for all these tokens which we're seeing coming onto Ethereum, and we're linked with a larger exchange which has already been running for 3 or 4 years called Bitfinex, which is one of the essentially one of the largest cryptocurrency trading exchanges. And so maybe the next 15 minutes plan rather than today's plan will be talking about our new exchange and why we've taken this route. And then the role of cryptocurrency exchanges in general in this ecosystem, and then in the bigger picture of the wider financial ecosystem and where we think exchanges like us can play a role, and also what the importance of is of decentralization. So one of the big decisions about launching this new exchange was around the fact that there are really two very different asset classes which we're already seeing in this blockchain ecosystem. So the first is cryptocurrencies, which clearly are something new. And the second is these utility tokens, which we've heard a lot about yesterday. And utility tokens clearly aren't the same as cryptocurrencies, although they are based on blockchain. And what we really see is that actually their value is derived off something very different than what the value of cryptocurrencies is based on. And so if you look at some of these tokens, they have very high valuations compared to what you might expect if they were equity. They're clearly not equity. And what we can see is that for them to have some of these valuations, so for example, a token could be worth $200 million already with no customers that you can talk of and no live product, either there's a massive bubble and something's gone completely wrong, or they have value which is not the value you'd expect from equity. So it's not just a company issuing equity and then paying out dividends, for example, to shareholders, but something else is happening here. And what we think it is that the value of these tokens is really based on the network effects that they're building, and you actually get a value coming the other way. So from your network of token holders, a company can then start to really see new open source contributions flowing towards them, a lot of new talent coming towards their ecosystem that they're building around their product. And so really we see them as almost network effects which can both be bought and sold. And that's what the exchange we're building is based around. So to talk a bit about Bitfinex, this is a cryptocurrency exchange which really wants to focus on those core cryptocurrency exchanges. And so we have developed Ethfinex to focus more on utility tokens and ICOs, and also to cater to a sort of new series of projects in this financial ecosystem, like Melonport, for example, who will want to interact directly on the blockchain and have full transparency rather than using sort of off-chain exchanges where you have to take out your funds and exchange and bring them back on-chain. And in the long run, we want to be able to really focus on all sorts of tokenized assets, so tokenized dollars, tokenized sterling that we heard about, and in the future, anything else which could be used as an asset on-chain. So the fact that these are not like cryptocurrencies mean we're also focusing a lot on community, and the reason for that is that there's a big effort that needs to go into due diligence in these projects, but also some way of analyzing what the value is behind them and filtering out high-quality projects from those which just getting a lot of information, but which is not being analyzed. And there's no real source of this analysis like you'd see in traditional stock market, and that's what we want to try and bring in. So particularly, one of the most important parts of this is around having native blockchain settlement. And that's something which is needed in order to integrate with this whole new ecosystem of projects which are growing up here. So particularly being able to provide on-chain price oracles through having trades settled on blockchain, which can then be used by other projects to get those prices, being able to interface directly with other decentralized applications, and having a transparent audit trail of every trade that happened on-chain even if you're keeping some of that data obfuscated through other privacy means to protect trading strategies, for example. And you then reduce the risk, the counterparty risk, which is currently associated with centralized exchanges. So now I want to talk a bit more generally about the role of cryptocurrency exchanges. So initially, the reason these all came about was to provide a link to the traditional banking sector so that people could buy and sell Bitcoin initially and then Ethereum and other cryptocurrencies. And that's still to some extent what's being done today. So exchanges like Bitfinex have to conduct KYC and compliance for all their users, also have very strong AML requirements on them, and operate in many different jurisdictions. So it becomes a very complex issue to manage, and it's something which decentralized exchanges in the future are hoping will not be so much of a problem for them, as they don't, I think, at the moment plan to integrate directly with fiat currencies and to trade those. And what this provides is a very simple, easy user interface for users. They don't have to worry about managing their private keys on blockchain, and they can quickly and efficiently trade these currencies. But they do then have to trust this centralized party. And to compare that with the traditional world, I think what these are doing, these cryptocurrency exchanges are doing that's unique, even before we start talking about decentralization, is providing some transparency in that, for example, all trading history is open and free for anyone. There's no barriers to entry to joining and trading on these exchanges. You don't need to buy a membership. You can set up at any point, create an account, and start trading. And there's sort of free and true competition here. There's not any sort of cliques or companies which will only allow you to join if you have over a certain amount of money or pay the right membership fees. And that's what we're really seeing very clearly as potentially the way that this is going to be a much more open network in the long run, particularly as we move further and further towards full decentralization. So what's often talked about with decentralized exchange is the concept of, and there's a big variation here in what people sometimes mean, but one of the key concepts is atomic swaps. So that's the idea that you have settlement on a blockchain, and when two parties trade, you can't have a successful trade without both parties getting their side of a swap. So say I have one token and someone else has another. If I try to send mine but I don't get one back, the whole trade will cancel and be reverted. So what we're working with here, in Ethfinex in particular, is this idea of a kind of a smart check. So as a user, A here, I can essentially write this smart check and say, I want to trade this amount at this price, and essentially that's my limit order. And if I then send that to Ethfinex, we can't execute a trade on your behalf unless we meet those exact requirements that were given by your smart check. When we find someone who can act as the other side of that trade, who's also likely signed a smart check, we can execute them through a smart contract, and it will conduct that trade between the two parties. So that's a very simple way of doing decentralized exchange. The big problem there is that every trade is essentially, although we're doing all the matching off-chain, every trade is going through the blockchain, which can be, at the moment, very expensive, slow. And the real question we have to ask is, does that solve a real problem, or is it just solving a problem in the cryptocurrency space that we've almost created for ourselves by bringing in these new currencies which are only tradable on-chain? So that's the question that we then sort of focused on a lot, was we want to reevaluate the purpose of why we're building all of this. Does it have real value outside this ecosystem, or is it just solving a problem which actually we've created ourselves? And what we came back to thinking was, what's really important to investors is transparency and knowing that they're getting the best execution, which is sometimes hard to get at the moment. It can be very opaque with very complex systems where the rules themselves aren't clear to outside investors. We also need to have fast settlement and a clear audit trail for both regulators and certain other bodies. And we want to minimize counterparty risk and make sure that this system continues to be open, accessible, and interoperable. So those were the kind of fundamental principles that we were trying to achieve. And with those principles, what it became clear for the moment is that in the short term, full decentralization probably isn't required or able to provide those benefits. And so we've taken instead this hybrid decentralized approach where we'll actually have a mainly centralized exchange, which will be community run and community owned so that the profits return to the users of the exchange, but that it'll also have this native blockchain settlement aspect, which will be partly decentralized and allow users not to have counterparty risk and to have certain trades settled on-chain. And in order to enable that, we also have a Nexus token. I won't go into too much detail about it. Essentially, there's no ICO, but it's earned by traders on the exchange. And so the more you use this exchange, the more of the tokens you earn, and essentially you become a part owner of the platform, which in a way isn't so different from what we might see in in NASDAQ or other exchanges where you need to basically buy a membership, but it still keeps this openness in that you can join it and build up your membership over time through trading. So that's the general principle of what we're building. The way that it'll all work will be to have this mainly centralized exchange, but link it with decentralized exchanges. And part of the reason why this approach is so important is, as we've heard, I think over the last few days, here protocol is much more is where the value is more than application. But in this space, which is moving so quickly, protocols will change and will need to change and upgrade every few months. And there's no point building a system now which is based on, yes, a valuable protocol, but which you'll need to upgrade in 3 months. So having this hybrid model will mean that we can still keep a valuable application for now and upgrade that protocol over the next 3, 6 months to a year, and eventually have a fully decentralized exchange without, for now, but for now remaining agnostic over the exact technology we'll use. So I think with that, I'll close up, and if there's any questions, then I'm happy to answer.
So questions and breaks, because we're a little behind schedule today. I've actually been asked, we have Niklas on stage next from Bitcoin Suisse. Bitcoin Suisse, for those of you who don't know, is a centralized exchange. For those who don't remember, we actually used Bitcoin Suisse when we did our token issuance back in February. I think we were one of the first, and I'm hearing that they have I don't know if this number is right, Niklas, but over $1 billion to date of ICO flow through initial offerings through their exchange this year. So we thought it would be interesting to have a different perspective on that. While they set up, maybe just a couple of anecdotes. I've been told to kill 30 seconds before they set up. I guess just a little anecdote maybe.